Manisha, a housewife, sounded very happy. She was humming some song and browsing through shopping app on her mobile phone. Her husband Jayant was pleasantly surprised on seeing this. But when he came to know that she was shopping, he turned a bit serious and said their budget was running tight as he had paid a lot of taxes last month. Manisha assured him that she is not spending from his salary. Jayant got curious and asked if she had won a lottery. Manisha replied that she invested in a mutual fund where she got 65% return. Jayant couldn't believe those words. How come a fund gives 65% return? Manisha added that there is a small cap fund. In general, small caps have given an average return of 40%. Jayant started wondering what's so special about these funds.
In the last 3 years, small cap funds have given 40% return. This might entice anyone. However, before flowing to it like a moth gets drawn to a flower, you should know what small cap funds are. What's the reason for robust returns in these funds? And what kind of investor should invest in it? Small cap funds invest around 65% of their capital in small cap shares or equity instruments related to them. The benefit of investing in them is you can ride the wave to success as these shares grow. This helps in getting massive returns.
Small cap funds give good return, but they are very risky because they are quite volatile. Generally, it takes time for small companies to grow. Besides this, small cap shares are impacted by change in market no matter how small it is. An investor should choose a small cap fund on the basis of his risk appetite and investment horizon. Generally, you need a high risk appetite and a long investment horizon to invest in a small cap fund. So it is good for risk lover investors having a long term horizon.
So in India, obviously there are various mutual fund categories, and small cap is one of those categories which clearly says, which SEBI clearly defines, saying any company which falls beyond the 250, beyond the top 250 companies as per the market capitalization, that's your small cap space, right? So you can invest into those funds, but obviously investors who tend to have that risk appetite to invest into this kind of category, because this category involves high risk, high return, right? So if an investor is a very conservative investor and he's not able to take that risk, then he should avoid this kind of a category. But for a customer who is willing to take that risk and who have that risk appetite, should look at investing into this kind of a fund.
Small cap mutual funds are tax similar to equity mutual funds. If you redeem the units of your equity fund within 1 year of purchase, you incur short-term capital gains. Regardless of your income tax bracket, there is a 15% tax on the gains from these funds. Holding units in an equity fund for more than 1 year incurs long-term capital gains. However, gains up to 1 lakh rupees are tax-free, and for gains above 1 lakh rupees, you are required to pay tax at a rate of 10% and you do not receive the benefit of indexation.
In terms of returns, small cap funds have outperformed S&P BSE 250's small cap index benchmark in the last 5 and 10 years. In the last 3 years, these funds have given 40% return. However, a big reason for this is the base effect. 3 years ago in 2020, the situation was very bad due to COVID, when all the markets were in free fall. For example, Quant small cap fund fell 44%.
So yeah, the last 3 years has been a very good period for the small cap category, and the last 3 years would you can define the last 3 years like post-COVID era, right? When the markets were down, then they picked it up, right? But in the last 1 year, if I just consider the last 1 year, the return of small cap has been in the negative territory. But when I compare that with the headline indices, right, the Sensex and the Nifty, which has delivered a positive return, but small cap for some reason has not been able to deliver that kind of a return. But over a 3 year period, the category has delivered around 33 to 35% return. If I just go back in history, and since 2007, if I see on a calendar year basis, right, since 2007, there are only 5 instances where small cap category has delivered a negative return. And any subsequent year, right, and the history has proven, right, except 2019 when the category delivered roughly around 25 to 30% return. Given this scenario, and given the scenario where we are today, right, wherein we expect the RBI to get into a pause zone, right, maximum 25 bips hike from here, and then it should stabilize. That would be an ideal scenario for these kind of companies. Why? Because these kind of companies, when their input margins, right, when their input cost goes down because of various interest rate scenarios, that's when they tend to have an attractive margin, right? And that's when they tend to do good. So I would feel maybe the last 1 year has not been so good, but where I am today, what we can see now, I feel it should be a good tactical play in your portfolio, and you should have a good tactical allocation to the category.
Many times, when the market conditions are favorable, small cap funds outperform other equity oriented funds. It is often observed that when they grow, your investment grows rapidly. But when they decline, the losses are significant as well. This is why they carry a higher risk. Small companies tend to underperform in bearish markets because they lack sufficient financial resources to navigate challenging market conditions. Therefore, these funds experience significant volatility.
According to data from the Association of Mutual Funds in India, investments in small cap funds were 2,255.85 crore rupees in January 2023, 2,246.3 crore rupees in February, and 2,430.4 crore rupees in March. Similarly, the figures show that the net assets under management of small cap mutual funds have increased by up to 25% in the 1 year period until March 2023. Small cap funds are attracting young investors, and this is because there is an increasing awareness about financial instruments among millennials. In the next 5 to 7 years, young investors will have financial resources that will enable them to withstand the fluctuations in these funds. This will allow them to plan for long-term objectives such as retirement and their children's education.
If an investor wants to invest in a small cap fund, they should not only focus on the fund's returns, but also compare its return with benchmark performance before making any decisions. Financial experts also advise investing in small cap mutual funds through a systematic investment plan. Before investing in these funds, one should consider their objective, risk appetite, and investment horizon. It is recommended to allocate a small portion of one's portfolio to small cap funds to minimize the possibility of significant losses.